All right, let's dive into Veeva Systems. Here's a company that just posted some really strong earnings, only to watch its stock take an immediate nosedive. So what in the world is going on here? We're going to break it all down.
So you look at the results, and on the surface, everything seems great. A fantastic quarter, right? But then, boom, the market reacts, and not in a good way. It's a classic paradox, and it really begs the question, why would a company that seems to be firing on all cylinders see its stock fall? We're going to dig into the numbers, look at the big picture strategy, and get into what we believe the market is completely missing here.
Okay, let's start with the headline numbers, the stuff everyone looks at first. Revenue, a very strong $789 million. That's a solid beat of almost $21 million over what analysts were expecting. And their non-GAAP earnings per share, also a nice beat. So from a purely operational standpoint, this looks like a home run, a really, really strong performance.
But, and there's almost always a but, isn't there? This is where the story gets a little tricky. It's kind of like a tale of two different report cards. The non-GAAP number, which really shows how the core business is doing, looked great. But the official GAAP number, that one actually missed. Now, why the difference? It mostly comes down to non-cash stuff like stock-based compensation. For some investors, seeing that GAAP miss is a red flag. It makes them question the quality of the earnings, and that's what likely spooked them.
And spooked is the right word. The reaction was immediate. The stock dropped 3.7% in after-hours trading. You can just see the market laser-focused on that one thing, the GAAP miss. But here's our take. We think that's a huge mistake. It's missing the forest for the trees because there are two absolutely massive strategic moves happening in the background. Let's dig into the first one. First up is this brand new landmark partnership with IQVIA. Now, if you followed Veeva for a while, you know that the dispute with this data giant has been this dark cloud hanging over the company for years. It was a huge risk. Well, this deal doesn't just clear the air, it completely changes the game for Veeva's entire commercial business. And hey, don't just take my word for it. The CEO, Peter Gazzani, he came right out and said it. This is the biggest news in commercial for a long time. And honestly, that is not an exaggeration. This deal literally erases a major problem that has been a thorn in their side for ages. So to really get why this is such a big deal, you have to know the backstory. For pretty much a decade, Veeva and IQVIA were at odds. It was a legal and data battle that the CEO himself described as a hole in our boat. Basically, it stopped Veeva from using IQVIA's top-tier data and some of their most important products. And just like that, this quarter, that whole problem is gone. The ripple effects here are just huge. I mean, this deal breathes new life into key products because they can finally tap into that crucial data. It takes a major rival and turns them into a partner. Think about their sales team. A huge objection they used to face in global deals is just gone. It allows them to offer this complete, wholesome solution. This really, truly de-risks their entire commercial business in a fundamental way. Okay, that was big news number one. Now for number two, which might be even bigger for the long term, we're talking about Veeva's incredibly ambitious plan for something called agentic AI. And listen, this isn't just them bolting on some new feature, this is them building an entirely new foundation for their platform. So you're probably asking, what on earth is agentic AI? Well, the simple way to think about it is this. Imagine super smart digital assistants, or agents, that can handle complex jobs with multiple steps, all on their own. They're like these automated experts that are trained specifically on how the life sciences industry works. And this is the key. Why does Veeva think they can win here? Well, the CEO calls it a structural advantage. And what he means is Veeva is already the backbone for so many companies in this industry. Their software is where the work gets done. So they can plug these AI agents right into those existing workflows. A more generic AI company, they just can't do that. That deep integration is Veeva's secret weapon. And this isn't some far-off someday plan. They have a concrete roadmap laid out for years. The very first AI agents are coming to their CRM platform this December. That's just a few months away. And then you'll see a whole wave of them for clinical, regulatory, and safety all the way through 2027. It's a very deliberate, step-by-step rollout. Okay, so we've talked about a big partnership and a huge long-term AI strategy. That's all great, but what about right now? How are they executing today? Well, let's look at the proof, and the best place to see it is in the battle for the next-generation CRM market. And the results are just crystal clear, especially when you look at the biggest fish in the sea, the top 20 biopharma giants. Veeva has already locked in 9 of them for their new Vault CRM. And their main competitor, Salesforce,
they've only got 3. I mean, that is a dominant 3-to-1 lead. There is no other way to slice it.
But here's the kicker. It's not just about winning the deals. It's about actually getting the system up and running. Veeva already has their first big customers live and using the platform right now. Meanwhile, Salesforce, their earliest go-live for a similar customer isn't even expected until late 2026, and it could take even longer. That gap in execution, it's enormous. It's a massive competitive advantage for Veeva.
Okay, so let's pull all these threads together. We've seen the numbers, the partnership, the AI strategy, and the execution. So what's the verdict? What does this all mean for the stock? It's time for the next call.
First thing to look at is the official guidance from the company itself. And what are they telling us? They're confident. They actually raised their forecast for the full year, for both revenue and earnings. That's a powerful signal. It tells you that forget the market's knee-jerk reaction, the actual business is strong and getting stronger.
So after weighing everything, our rating here at Talk Tickers for Veeva Systems is outperform. Plain and simple, we think the market is focused on the wrong things right now and is getting this story wrong.
And here's why, in a nutshell. Our entire thesis is this. The market is obsessing over a little bit of short-term noise, that GAAP miss, and is completely undervaluing 3 massive game-changing catalysts. You've got the IQVIA deal, which makes the core business safer and better. You've got the AI plan, which opens up a huge future opportunity. And you have the CRM wins, which prove that right here, right now, they are out-executing everyone. Those are the things that we believe will create real value over the long haul.
And as always, please remember, this is not financial advice.